Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Massar and Tim Stenovec. Welcome to our audiences across our Bloomberg platforms on a down week for the markets.
Yeah.
Once again here, as earnings not necessarily saving us, and I'm not sure the Fed is going to save them either.
Yeah, that's going to be interesting, right? The Fed decision next week, that'll be a focal point, along with some really important earnings as well. But it is interesting to see the negative tone, even though we kind of are leveling out here, but we are definitely way off our highs of the session today.
Eric Clark, a portfolio manager over at Rational Dynamic Brands Funds, thinks the consumer is actually going to save us. He thinks people have written off the consumer. And look, he's got a lot of consumer-focused companies, including Nike, Lululemon, Apple, Live Nation inside his Rational Dynamic Brand Funds.
Trade, doesn't he?
He does like the baby boomer trade, but he says, hey, what about that $7 trillion in money market funds? People have that money just sitting there. They could still spend it on goods and services.
Yeah, but it's making so much money for us. It's, we have a 5% yield on that. So why would anyone take that out?
Maybe they want to go see Taylor Swift.
Do you need to buy another pair of Uggs?
Yes. Or go to Europe? Yes.
The answer from Carol is yes. Yes and yes.
YOLO. It's the YOLO trade.
I hope my husband's not listening.
And of course, you look at what happened with Ford and GM and Stellantis over the last hour. We're hearing, of course, that GM and Stellantis is looking to match the 25% pay increase that Ford has offered to the UAW. Perhaps the strike is coming to an end, but then we have to contend with the absorption of higher costs for all three automakers.
Yeah, I mean, sources telling Bloomberg that they're working this deal out today and could announce it on Sunday. But we were just talking here on the television program, guys, about just the share reaction. I mean, they were already down even before the latest news here. But you're talking about, a 4 to 5% loss on GM on the day. And Ford, last time I checked, was actually on pace for its worst day, going back to 2011.
Down 12%.
A Dow Jones Industrial Average not having a great day or a great week, down about 1% on the day, back down to around 32,400. The S&P 500, another close below 4,200, down 20 points or about 0.5% here on the day. And the NASDAQ Composite actually holding on to some of its gains here, up about 0.4% on the day, though we should point out still in the red on the week. And the Russell 2000 not gaining any traction. That is your laggard for the major indices, down 20 points or 1.2%.
Yeah, risk off certainly for the week overall when it comes to the equity trade. Having said that, Scarlett, I'm looking at the S&P 500. This is the day. Most names down, 414 to the downside in the S&P 500. 89, though, actually gaining ground. I'll get into some of those. And you've got none unchanged. But you've got the major industry groups.
And the industry groups really highlight how the Magnificent Seven are the star performers in today's trade. You look at the gainers here, retail, that's Amazon, semiconductor equipment makers, that's Intel, tech, hardware and equipment, media and entertainment, Magnificent Seven all represented there. On the downside, pick your poison. You've got banks off by more than 3%, pharma companies off by about 2.5%, energy stocks lower by 2%, 2.3%. A lot of decliners there, but the big tech names are keeping the S&P 500 from falling more.
Yeah, go ahead.
Sorry,
please.
Just before we move on to some of the individual names, I mean, we kind of be remiss not in pointing out here that the S&P now down 10% from that year-to-date high, which was, of course, back on July 31st. That's the same high that we saw for some of the other indices. That NASDAQ 100, remember, even though it did manage to close higher today, was already down about 11% from that high in July. And, of course, the Russell, which has been in the doldrums now down about 18% from its year-to-date high in mid-July here. So we're talking about some really significant declines here, at least if you pay attention to these kind of round technical levels.
Well, it speaks to the volatility, like in a short time span, if you will. And if you think about over the last, 6 months, 12 months, the different thinkings, just think about it. It was earlier this year we were worried about the regional bank sector and whether that was going to be much more broadly felt in the U.S. economy. And then we saw a rally and then we saw a sell-off. So it has been quite the back and forth, if you will, in terms
when
of
does that shake sentiment, though? You talk about year-to-date gains on the S&P now that are only at 7%. They were double that, at the end of June or mid-July or so, I believe. Here you have a Dow Jones Industrial Average that's now is in the red on a year-to-date basis. And I was telling Scarlett earlier, over in Europe, they've basically erased all of their gains for the year, or at least are on the precipice of doing it. Yeah,
we spoke to Jeff Kleintop earlier this week down at Charles Schwab. Carol alluded to this earlier, but he said, forget the U.S., increase your allocation to Europe. Yeah, to Europe. They're feeling it worse in Europe right now. Stocks are cheaper in Europe, he said, on a valuation basis. That is where the opportunity is.
Talked about outperformances, too, in terms of some of those European names. But
Not seeing it yet, though. right?
Not seeing it yet.
Yeah,
He's
not
saying
seeing
go
it yet.
in while it's feeling
Exactly.
bad. Yeah. Okay, that makes sense.
Let's get to the idea, Carol. And I know you need to kind of get to some of the individual gainers, but I am curious that when you go through those gainers, that what sort of moved the market here? I mean, we're not getting that from the big cap tech names. I know, at least on a weekly basis, we certainly didn't get it. I know some of them did perform okay on the day, including Amazon.
Well, it's interesting that you say that because, you know, when Intel was up, about 9.3%, that's one of my gainers. We know we all broke the earnings last night, and it looks like maybe the turnaround, right, is working. We heard from the CEO on Bloomberg TV. And initially in the day, I'm just looking right now, the stocks did finish with about a 1.2% gain. But earlier in the session, not a lot of names were moving to the upside. And it was interesting. I thought, well, it should have, you know, brought the whole market up in terms of the semi market, if you will. But it looks like it took some time to kind of get there. So kind of interesting. I mean, Amazon up 6.8%. Interesting name. It finished off its highs of the session. We know, again, the earnings, the cloud, AWS, also the retail side of the picture. But I know what you're saying, you know, that it didn't ultimately raise the whole group and keep it there in the trade. And it just speaks to some of the nervousness that is out there.
And it gets to the idea, too. I mean, you kind of forget their weighting doesn't quite have the same impact as some of the others. And it kind of leaves what?
Amazon does, though, right? That's a pretty significant one on the S&P and the NASDAQ.
Yeah. I'm not saying it is, but I'm just saying, like, when we talk about what's going to be the salvation, we've only got, 2 magnificent 7 names left. In fact, and when you look at the biggest weighted names, what is it? It's basically Apple next week and NVIDIA and maybe like 2 or 3 weeks after that?
Yeah, exactly. Yeah. Hey, I just want to mention Dexcom only because it's been on a tear. It keeps showing up and popping up in the top of the...
And not to belabor the point, but Amazon is down like 12% from its year-to-date high. Sorry to interrupt.
No. Yeah. What is it that you say, Tim?
You went in doubt, zoom out.
Okay. Yeah. I like to set him up for that. Hey, Dexcom, I just want to mention because we keep talking. I like it.
I stole that from Katie Greifeld. I mean, I gotta cite my sources
running for
here.
office, you know. Dexcom, though, again, another 10% move in the upside. This company coming out with their results. This has been under a lot of pressure. It was down 45% earlier over a period of time on concerns over all of those new kind of weight loss drugs and thinking that people didn't need these glucose monitors. Anyway, the company came out. It raised its revenue guidance for the full year. So it allayed some of those fears, and it also brought some of the other names in the group, Tandem Diabetes and Insulet, also were gaining in today's session.
We should note Eli Lilly reporting next week, and they're certainly working on their own version of a GLP-1, trying to get that approved for weight loss purposes. There were more than 400 stocks in the S&P 500 that were lower today. I had so many decliners to choose from. I do want to start with Chevron. Chevron falling the most since 2020 on disappointing profits, down 6.7% today. It missed third quarter expectations by 66 cents per share. This came after amid losses from overseas refining, rising costs at oil field project in Kazakhstan. We should note that ExxonMobil also reported lower than expected third quarter results, though it cited weak results in its chemical business for those results. Ford falling the most since 2011 at the close, the most in more than a year. Shares down more than 12% today. Missed third quarter earnings expectations. It cited higher costs, lower quality. We learned yesterday that it was pulling its forecast for adjusted EBITDA. This just after boosting it in July. We saw a similar move from GM earlier this week. The UAW work strike costing a lot of money for the company, $100 million in the third quarter for a total of $1.3 billion so far. We should note it did win labor peace through a tentative contract with the UAW. And then finally, I want to take a look at shares of JP Morgan. Shares down close to 4%, or should say it closed, down 3.6%, after investors learned that Jamie Dimon plans to sell shares that currently worth about $141 million, or now I guess $135 million after today's move.
That's some good quick math.
Yeah, thank you. First such transaction since he took the helm of JP Morgan nearly 18 years ago, guys.
All right, let's check in on the yield space real quick here. You did see yields drop on the short end and the middle of the curve here, the 2, the 5, the 10-year, all lower here on the day. And we should point out, across the entirety of the curve, we are lower on the week. So a bit of a respite from the sell-off that we have been seeing in the Treasury space. So we should point out here, you take a look at those 5s in front of those numbers here. 5 on the 30-year yield, of course, 5 on the 20 and 5 on the 2-year. The 10-year pulling back from that 5% level here. But of course, this has been the scary part, at least for a lot of investors. Well, I guess are too young to remember the last time we were here and how they adjust to that environment.
Yeah, well, for all intents and purposes, the 10-year did get to 5%. It got there earlier this week. It's retreated a little bit. One thing that we should mention, and we do so every Friday, is that investors might be a little bit weary of being too long heading into the weekend, given that Israeli forces are expanding their activity in the Gaza Strip. We don't know what's going to happen over the weekend. Oil prices are higher. Gold prices also higher, moving above that $2,000 an ounce mark.
Yeah, those are some interesting trading moves, and certainly in reaction to that concerns in the Middle East. All right, guys, that's a wrap. We've got a big week coming up, but you all have a good and safe weekend, and we will see you, of course, on Monday. All right, that's a wrap. Our cross-platform, radio, TV, YouTube, and Bloomberg Originals. We will see you next week.